true, you can actually use ADU income to now qualify on an owner-occupied purchase using conventional financing. This is really big news, especially for our savvy buyers out there, our house hackers that are looking to get into some extra value add on their home purchase. And for those of you who don't know what an ADU is, well, let's take a quick peek at what an ADU stands for. Well, it's an auxiliary dwelling unit, ADU. It is an additional dwelling unit created on a lot with a house, attached house, or duplex. And an ADU can provide additional income in the form of rent, helping make that monthly mortgage payment a little bit more affordable, especially during these higher interest rate times. And ADUs may add value to your property. Now, what are different ADUs that you could be looking at? Well, a lot of homes in the Portland metro area have basement conversions where they got a permanent ADU and they put it in the basement. So you're living on top and then you're renting out that ADU in the basement. Now, there are some homes in the Portland metro where they just did the single family home and they built an ADU or they converted a garage in the back, like we see in these two examples. Sometimes this could create better rent scenarios, but again, these are a little bit more rare than the most common basement conversion. And then I haven't seen these out there personally, but they do exist. There are attached ADUs. And again, same concept. They're not under you. They're not attached. They're just attached in another way to create income. Now, using ADU income to qualify, well, how do we do that and how does it help? Well, you can now use ADU income to qualify when purchasing a owner-occupied home. Down payment is as little as 3%. So this is huge, especially for our first-time home buyers that are looking to buy their first home. And if you currently own a home, but you found a home that you wish to write an offer on, well, you have to put 5% down on that. So if you find a new property, you're not a first-time home buyer, it's 5% down, no matter if it has an ADU or not. Now, we get to use 75% of the lease agreement. And if there's no lease agreement in place, well, then we get to use what fair market rent is. And that is dictated by what's called an appraiser. And that appraiser is going to let us know what the comparables are out there. So, for example, if the appraiser said that there was $2,000, fair market rent was $2,000, we get to use $1,500 to help you qualify and offset that mortgage payment. It can help create additional income, lower clients' monthly burden for a mortgage payment. So again, helping you cover that monthly nut. And borrower must have 1 year of landlord experience. And if you don't worry, because the alternative is that you just take a landlord course and that you have that completed and provide us proof before we close on that subject property with an ADU. Now let's talk about a real life example, how the strategy helped one of our borrowers be able to buy a home with an ADU. So their names were DNS. And they found a subject property for $660,000, and they're putting 5% down because they're house hackers, they're pros. They already own 2 additional properties, and they just leapfrog property to property after every couple of years. And they identified a great home with an ADU. So they're putting 5% down because they're not first-time home buyers, so that's $33,000 on $660,000. Loan amount $627,000, and they locked in at a base rate of 6.625%. Now, the monthly mortgage payment, that's principal, interest, taxes, insurance, and since they're putting less than 20% down, they have mortgage insurance. That's $4,637.88. Now, the ADU was not leased out, so the appraiser came up that the fair market rent for that home, that ADU, was $2,400 a month. Now, if we try purchasing this home without the ADU income, well, our debt-to-income ratio would be 57.474%. Conventional financing only allows a customer to go up to 49% in most cases. So we're over. But due to our new Snazzy program, we can now use ADU income and not lower the debt-to-income ratio to 49.8%. We were under that 49.99% debt-to-income ratio and qualified. Now, what is that bonus? Well, when the customer moved into the home and they rented out that ADU, well, after backing out the $2,400, they were only really paying $2,237.88 a month for their mortgage payment. And that's what a lot of people pay in rent in the Portland metro area. Plus, they're getting bonus of future appreciation, rent growth, and also tax write-offs down the line. Because remember, they're probably going to be in this house for a few years, decide to remove that mortgage insurance once they have 20% equity, and then go on to the next property and rent out that top unit as well. So that property most likely will be cash flowing very nicely when it's all said and done. But